All right. Good morning, everybody. It's a full house. We have a lot of things on the agenda. Right? We get revised or forward GDP. We've got a 10-year note. European Central Bank is going to have a few speakers. We've got Waller out speaking today as well. Keep in mind that the numbers you see on my screen are in my time zone. So you're going to want to check in your time zone. But it's 11 o'clock Eastern is the right time for the Fed to see. We've got, I want to kind of back up a little bit. Jamie Dimon was out talking yesterday. Probably a good idea to hunt down that interview. He usually has things worth listening to, kind of take it with a grain of salt. European market wrap kind of did a little bit of overnight news information. It's worth reading to see if there's a particular sector that did good or didn't do good that's worth looking at. Plus, last night there was some Fed speakers, and getting a wrap on what those Fed speakers were talking about will be useful. Apparently, if they come out with a 75-point rate hike at this point, that's going to be seen as dovish. I kind of let that sink in a little bit, right? That's what they gave us last month, and everybody said it was hawkish. If they do that now, if they only add that word there with a little emphasis, if they only do 75 points, that's going to be considered dovish. I don't know if you want to chew on that for a little bit. So as we do every morning, we want to go to Thinkorswim, Market Watch, Calendar, get rid of everything except Econo Day events. So if yours looks like this and it's just really cluttered and full of junk, uncheck everything and then just turn on Econo Day events. Set the description next to the time, 8:30, 10:30, 11, 11:30, and that pretty much is a wrap for us. So while it seems really full in the later part of the day, it really isn't, right? Kind of stops at the 4-week auctions. These are very likely to be impactful today, so I would not expect a muted range for lunch, and instead I would expect lunch to bring with it a change in sentiment. And we're looking at something to change completely and totally, right? We're not looking for some slow grind or some chop or a lazy reversal off of whatever we've had. We're talking about with flow, with conviction, tick trend, UVol, devol, advanced decline, everything lit up, changing. And if it doesn't happen, well, you should know that by, say, 11:45, maybe by noon at the worst. If that sort of environment doesn't appear, you're good. You know that it won't appear, not from these things. It could also, it could appear from the Fed speakers this afternoon or any sort of news that comes out this afternoon, but it won't be from econ. We're looking at a year-to-date chart. It's a daily time frame, and we've got a perspective. How far away from the 10-period moving average are we? Not even 2%. And for the downside, generally beyond 4, maybe 4.25, that's where we've gone, quote, too far before we start to see the market pause. So it's not overextended to the downside, not even a little bit. Another thing worth noting while we're out here on the daily time frame is the weekly expected move. So it's easier just to draw a box around that. That way we can kind of visualize what the expected move was for the week. 38.18 to the downside. And of course, we are beyond that. But it's worth noting that we didn't continue to sell off, and this is important. So the way that the algos will hedge, say the institutions, they have a bunch of options trades in the SPX and then the SPY. Those options are running with a fluid delta. The delta changes depending on where those option strikes are located. When price and they're running them in strangles and straddles, right? So they'll build a bunch of straddles on one of these lines, and then if the market breaks through or goes beyond those lines, they're now beyond delta neutral, and they need to get back to delta neutral. Well, that forces them to sell into selling and buy into buying. So when we break below the low, the algos have to sell to get to do to delta neutral. Now, what are they selling? Well, they'll sell ES futures contracts rather than in options, because futures have a hard delta, right? And they're trying to get back to delta neutral. This isn't something new, or it's not like I'm creating this out of thin air. If you go out and read about dealer gamma or dealer hedging, it's going to explain this in a lot of detail. There's a lot of articles about it. The main takeaway is hedging will be done with futures, and they have to sell into selling and buy into buying. So long and the short of it. One of the dangers of that is that we can get these very extreme moves before the market finally stops with that vicious cycle, and it ends at the end of the week. Thank goodness, right? Because every one of those options, strangles and straddles that we were talking about, they're going from a week to week basis. So by the end of the week, at the close, they're done with that attempt to need to hedge, to sell into selling. So the fact that we're outside of this box, but that we're not continuing to expand beyond the box in greater and greater scope and depth, that's a good thing. We're looking for it to stabilize here and really kind of define what it wants to do. Keep in mind, with the econ that we have coming in today and with our current location being what it is, we could very easily break this low. And if we break it, I mean, this low right now that we're looking at, 37.47-ish, right around in there, it's our last line of defense. If we break that, we're very likely going to retest the previous lows, 36.50, and I would not be surprised if we break through that and set a new low, even even just a couple points before we pull back off of it, right? We're talking about having like a micro double bottom, and the way that IBD describes a double bottom is that a good double bottom when it is tested, it should go farther than the previous double bottom before you get that reversal. You want it to go deeper than the previous bottom. It's designed to shake out weak hands. It's designed to trap shorts so that when the buying does begin and it begins to rip to the upside, all the people that tried to short that in the breakout to the downside, they're getting squeezed. And how do shorts get out of a trade? Well, they have to buy. So their buying adds to the buying that was already going on, which begets more buying, yada, yada, yada. All right, looking at a 15-minute chart, you can see that we're basically back down to the lows from the CPI report yesterday. The econ that's coming out this morning is not as anticipated to be, let's say it differently. It's not anticipated to be as impactful as yesterday's CPI, but that still does mean that we expect some sort of impact. There's only 6 events for the month that are anticipated to be as big as yesterday's event. Today's numbers are not one of those 6. So the expectation, as we do every day, we can range sideways, break to the upside, break to the downside. The argument for breaking to the upside is the least likely scenario. We're talking about a market running all the way back up to 38.74 and then running beyond that to the upside. While it is technically possible, because we would never want to say price can't do something, it's highly improbable that we would make that move. I will point out, however, that the ADR of today is sitting way up there. So this alone says we can make that move. If you're looking at it and you're thinking that's a little too far, I think you're reaching. I don't think we can actually run all the way up to 38.88. Yes, we can. We absolutely can, because that is the average daily range right now. We could make that, and it wouldn't even be considered an outsized move. But we are going to say that that's the least likely scenario today. What's more likely? That we maintain inside the range between 38.80 and 37.50. Now, inside of that range, you can break it down into quadrants, which would make things nice and easy. We're talking about institutional or universal pivot points. Call it the low of yesterday, the RTH low of yesterday. I guess you could get the RTH open, but you can see how those are kind of really close together. Then we have the Globex open of last night, or the RTH close of yesterday. Either one of those would be fine. RTH high and Globex high. And of course, we can reach back and get the Globex open from the day before. So as you can see, we've got a lot of pivot points by doing that. Right, and kind of run through these real quick. We're talking about 37.50, 37.60, 37.65. There is a pivot minor at 37.80, but it's just a pivot minor. So 37.77, 37.95, 38.34, 38.73. And if you wanted the minor from the Globex close from the other day, it'd be 38.21. So we got plenty of pivot points. All of that would be considered range trading, right? And within that range trading, we would just be looking to move from pivot to pivot. Simple enough. The other thing that we haven't talked about yet is the idea that we could break to the downside. So we talked about a top side breakout, and we talked about maintaining the range. What if things get nasty and we move to the downside? Well, the half of an ADR, we're already there. That's 37.52, and a full ADR would be 37.03. If we use that new quant drawing tool and we take it from our current low to that midday pivot that we were looking at earlier, consider this what we just measured right there, from 38.34 down to 37.50. If we measured that and we plotted 100% of that move, then the downside of that would be 36.65. The 50% mark of that would be very close to our full ADR. When you're dealing with a range and you get a breakout of the range, very often the breakout distance is either going to be 50% of the entire range or 100% of the entire range, right? And so it gets like your target 1, target 2. All right, we're looking at a 10-day, 30-minute. And what I want to do, because we're at the lows here, and this isn't going to really provide any sort of insight, is we're going to knock it back to a 20-day, 1 hour instead of a 10-day, 30-minute. Right now, normally I wouldn't use this higher of a time frame, but there's those two time frames are the times that I use, right? 10-day, 30-minute chart or 20-day, 1 hour chart. So now that we've got 20 days, we actually have price action to the left with volume profile that offers us a little bit of insight, right? So around that 38.80 or 36.80 and 36.60, that area, there is some volume down there. So should we fall towards the lows that we were seeing back in, we'll call it June 16, June 17, those two lows, should we even begin moving down towards that area, there is an expectation of some volume assist. Now, it won't stop price. We wouldn't call it like support. Volume support is not much support, but we would expect to see some sort of reaction there. Like we talk about every morning, when we're at the top of the box, we expect price to go to the bottom of the box. And when we're at the bottom of the box, we expect price to go to the top of the box. Well, right now we are at the bottom of the box. Seeing price break out of the bottom of the box right now and continue to expand farther away from the box is the least likely scenario. Now, trust me when I tell you that that's absolutely possible, right? It can do that, and it doesn't owe us staying in the box. This box is not support or resistance or anything like that, right? We're right at the value, and the value area is a expectation. It's not a handrail. We don't trust it. We don't lean on it, and we have no expectation that it's going to provide any sort of support whatsoever. Looking at the 5-minute, we don't have anything down here to carry forward. We still have some untouched point of control. Should we get that topside breakout that we were talking about earlier, we're very likely to hit one of those points of control. But the other one's up at 39.05, and we're not going to see that this week. Or it's very unlikely we're going to see that this week. All right, so pretty simple. If we break this current low, it's about to get wild out there. And there's no real volume support or any kind of volume acceptance or volume help until you get to around 36.70-ish. Gold woke up yesterday. It was pretty interesting. The extreme move that we saw over there. And gold is often referred to as a hedge against inflation, and inflation running out of control, blah blah blah. There was the spike in oil or in gold, but it didn't stick. It gave it all back, every bit of it. So, keep your eye on precious metals. It looked like we were going to start to catch a bid there, but that all kind of went to poo. It was interesting how little Bitcoin participated in everything yesterday. It certainly took the beat down, but it didn't really start to recover right away the way a lot of the other markets did. And as you can see, we've got some craziness still going on in bonds. It's happening literally right this minute. These moves in the bond and in the dollar and in the oil, it's been those three markets, very sharp, very extreme. And they've been using these markets in various ways. They've been using it for demand destruction. They've been using it to put pressure on the rest of the market. You'll want to continue to look for any news articles that talk about a tech company lowering forward guidance or laying off workers or anything that they're doing, and listen to what they blame. Right? Apple the other day made news when they said that the dollar right now was too expensive. It's too high. It was causing them issues, and they're talking about what? Lowered forward guidance, laying off workers. Not for Apple for laying off workers, but that's the kind of stuff you want to listen for. It's the kind of stuff you want to check in the articles. Tech companies are like really addicted to borrowing, right? And you take a company like Apple, which has really, really good borrowing credit. I kind of put it in like human terms instead of company terms. You either got good credit or bad credit, right? You're a good credit creditor or a bad credit creditor. Apple's got really good credit. The banks want to loan Apple money. They're happy to loan Apple money. They know they're going to pay them. But when you see Apple start to complain that the dollar is too expensive for Apple, what do you think them smaller companies are going to say? If it's too much for Apple and the Apple's got really good credit, those smaller companies must be suffering like crazy. And we're going to start to see that as we get into earnings. So in the current market environment with this dollar pressing, 108 and 109, and remember that the target in the dollar this year is 125. I had people asking, you think we're kind of getting to that these are going to be the lows and maybe we're going to base here for a while and then finally start to come out of it? No, I don't think so. I don't think we've even gotten started yet. All right, so keep your eye on the dollar today. Keep your eye on the bonds. It's these big exaggerated moves that you absolutely want to avoid, right? Or that when you see them, start looking to get a trade on. Like right now, we've got that beautiful big double bottom in the ES. And if you were looking for a trade opportunity, all you need to do is start to see this thing come up off of that low, right? And then now all of a sudden we got this move in the bonds, which would probably make me decide I wouldn't want this trade yet. And if I miss it, I miss it. So what? I don't care. This thing spiked like a mad demon just suddenly out of the blue for no reason. And it very easily could have impacted the S&P and the NASDAQ by doing that. And generally speaking, when bonds go up, stocks go down. That's the correlated market and the inverse correlated market that we generally would live in. So if you're trying to take a trade and you can't trust it to not suddenly spike and go in odd directions, why would you trade it, right? Sit back and wait for that stuff to get done. We're still looking for oil to get back above $100, but right now the main thing is that it stays above 90, right? So continued weakness at the moment. Just remember they're using this for demand destruction, just like everything else. Bonds, oil, and the dollar. It's these deeper issues that have a lot to do with the way that the S&P and the NASDAQ are moving on a day-to-day basis. It's more the macro. All right, we're looking at the sectors here. And my benchmark for the sectors is that they need to have moved at least 0.5% either to the upside or the downside. So BITO, that's that Bitcoin ETF, it is up 0.5%, and then natural gas is up this morning. And when it comes to something like natural gas being up that much, I'm a little suspicious. I would check to make sure it's actually getting intraday prints right now that warrant that number. Because if it's still reading, say, after hours from last night, then it's not up in the pre-market, it's up from the after hours. So now we can see after hours and pre-market. Natural gas had prints from earlier this morning. So yeah, it is up this morning. I still don't trust it. You always want to check. Silver down nearly 2.5. Gold down uh, nearly 2.25. Financials down 2%. Energy down nearly 2%. And really, it's across the board. I mean, we got very little of anything that's looking good out there on the legacy 11 sectors of the S&P. But let's take it and turn it in another direction and look at some things that don't quite land in that same category, like crypto. There are some crypto names that are up this morning. Some of the chip names that are heavily vested in crypto, AMD, TSM, or the EV market. Li Auto and Ride are, well, Li is not hitting the benchmark of 50%, but Ride is up more than 1%. Again, check to make sure that that's not after hours stuff. Uh, there is a print from this morning, but there's no real volume behind it. It was just a single print, so I wouldn't trust that. And then, when we're looking for a way to diversify away from the S&P, things like pot stocks can often be an inverse or an uncorrelated market. Some pot names that are up this morning include XXII, which is, it's actually a real estate company, but it's a real estate company that works to try to help pot companies find real estate. Cara Therapeutics, Universal Corporation, these are up this morning reasonably decent, but a lot of the more familiar names are still down. I'd still be looking for some sort of play in here, if nothing else, right? If there's nothing else. And when it comes to nothing else, by the way, we still got the two watch lists that we use all the time. It's just companies that have weekly options. And I had to make two lists because on TrendSpider, you can't have a list of like 600 names. And there's around 600 companies that have weekly options. So when you put the two lists side by side, you can see, I mean, there are companies in the green this morning. And even with the benchmark of 0.5%, there's plenty of names in there. AMD, JD, Alibaba, Kron, Costco, InBev, Twitter, Ride. So the idea is there's always something, right? But when you find something that's bucking the system and going opposite of the rest of the market, be be mindful of that, right? Like find out why it's going opposite of the market. If it's a sector or an industry that normally would anyways, then hey, no big deal. But if it's a tech name or if it's a highly correlated name within the S&P and the NASDAQ and it's not doing what its peers are doing, you probably want to find out the why behind that before you go in trying to trade that sucker. right, so we're looking at dark pool levels on Apple. These are dark pool levels that came in yesterday, 713. And we just kind of want to get a feel for where was a large amount of orders coming in at. So the 145.49, and that was the price of the market at the time. Take that a little bit farther. Here are our support and resistance levels based on dark pool information. So we're looking at 144.87 as a support level and 144.65. We got 2 billion at 144.65 is a pretty good number. No real upside resistance in dark pool levels until you get to 147.50. And when we start looking at the options that may provide a little bit of support or resistance, there's a significant level of long calls at the 150 strike. And the 50 strike. That's a lot of calls. And 165. On the sell side, a lot of puts at 145 and 140. So looking here at the dark pool and public equity levels, 153 is the largest amount of overhead resistance, and they're just about equal in their size, but 144.65, 141.65, and 131.55, basically back to back. So there is some dark pool support underneath that market. We've really narrowed the range between open interest in calls and puts too, by the way. I mean, that spread's getting really narrow. And another one worth checking out would be Tesla. For yesterday, it was 7-11-12. That was an area that got a lot of dark pool. So we just broke through a level. They're kind of overlaid on top of each other. But beneath the current market, 708. Let's kind of zoom in there a little bit more. 708.26 and 707.70, we'll call it 75, are two levels of support, and they're close enough together they might actually try to help each other out. And then 700 flat. I know it says 699, but I'd bet the roundy has more power than the 699 does. So some support down there, and then over our head, if you get past the current rollover there at 724, then 729.20 would be a place where I'd expect that dark pool resistance. All right, now, one way that you can use these levels is when you break through that level and it's shown that it's made the break through that level, trade it to the next level, right? They're just levels. It's just like what we would normally do with pivots. Trade from pivot to pivot, trade from level to level. We're looking at 700 with a significant level of long calls. Of course, we got a lot of long puts there too. And on the short side, short calls and short puts, same location. So the 700 on Tesla is just a significant amount of trading going on there, right? If we were bringing up like a DEX, DEX chart or a GEX, a GEX chart, we would see more than likely a lot going on right there at that 700 strike. 738 is the largest area of resistance to the upside. And for some support, 650 has a significant level to the downside. Open interest trend, these are very widely spaced, looking fine. There's nothing over here on the open interest side that remotely concerns me. So just wanted to throw out those two markets. We don't want to go through all of them. We'd be here all day. It's my day to stream. I will be in the large caps or no, excuse me, I'll be in the futures today. And Al Brooks live stream is at 4:30 this afternoon. I'm pretty sure that the live stream will be run from the futures room, but I'm not the one setting it up, so I don't want to say for sure that's where it's going to be, but it makes sense, right? That's where I would expect it to be. So, um, you don't want to miss that. Don't forget, Lucian is still looking for questions that you would like to ask Al during the presentation. So, if you at Lucian in the large caps, or excuse me, in the futures room, and add to the list of questions that we've already got, then he'd totally appreciate it because we bring in these uh, presenters for you guys, right? So being able to answer your questions during that is kind of the goal. So what I got, everybody. Be careful, be safe, and I'll see you at around 9:15.